Good morning, everyone, and thank you very much for joining me. This is the morning market review. My name is Russell Shaw. I'm a senior market specialist at FXCM, and today is the 1st of March. Just going to go ahead, bring up our disclaimers before we get on with the live stream. So here is the high risk investment warning. I'll leave this on screen for you to take a quick read through, and then we'll continue. I'll just leave it on screen for a few moments longer. Okay, let's just bring up the market commentaries disclaimer. If you can have a read through this as well, please. Okay, thank you very much. Now let's go ahead, start off with the real rate. All right, and it's changed up slightly. We're looking at the weekly real rate. It's changed up slightly since we got the PCE data out yesterday. Let's just do a analysis of this. Okay, so just take a look at last week's candle. Last week's candle we've got as the highest high in at least 3 candles. Hey Raj, good morning to you and welcome. And then this week's candle, let's just make this a different color to the red. We'll make it green. Okay, what you can see is that the candlestick for this week has now moved into what we call condition 2. So condition 1 is the highest high in at least 3 candles. Condition 2 is price taking out the low of the reference candle. And then we'll know later in the day, at the close of trade today, whether there is a condition 3, which would effectively be price closing below last week's reference candle. And if we get that, then we have a reference candle reversal in. So this is kind of what we're looking for. If you take a look all the way back in October, this would be a reference candle. It would be the highest high in at least 3 candles, and then the candle to the right closes below the reference candle's low. You see? So that's what we're looking for here. In other words, if we get that, then there is a potential reference candle or a turning point here. We get a potential turning point here. And if we get a potential turning point, okay, and rates come down, well, that's going to give us a lot of information in terms of our trading, because it's a key driver of currencies, stock markets, etc. Now, let's just go ahead and see how the dollar is reacting, given that we are potentially getting the reference candle. Remember, we don't have it yet. So there's still work to be done here. We don't have the reference candle in. What I do think is that we pretty much at sort of a top for our interest rates, but I'd like to see interest rates sort of moving down. And the reason why I feel that they will move down as we sort of evolve through the year is because the idea is let me just reply to Kim here. Okay. All right. So let us let's bring up the US dollar here and just see how the US dollar is behaving. All right. I'm bringing the US dollar underneath. All right, so what we're going to do here is we're going to keep an eye on the reference candle as well. Okay, so here is the reference candle, and we kind of, hey Kim, good morning to you. Can you see us now? Okay, can you see us now? Just let me know. All right, so we're looking for the reference candle in the dollar as well. We don't quite have it. Okay, we don't quite have it. So we're kind of stuck in no man's land at the moment. Why are we stuck in no man's land? Because we're waiting to see if we're going to get these reference candles. We're waiting to see if we're going to get these reference candle reversals. But we've only got one condition, two conditions, but we don't have the third condition. The third condition is everything. Without the third condition, you simply don't have the potential start of a swing. I just want to bring up Microsoft Paint. So just bear with me. I want to just bring up Microsoft Paint and just show you why we want to take a look at these reference candles. What's so important about these reference candles? So just bear with me. I'm going to just bring up Microsoft Paint, and then I'm going to try and share the screen. Just bear with me while I try and share the screen here. All right, you should see Microsoft Paint. Yeah, there it comes. All right, we've got Microsoft Paint now. And what we want to do is we want to just look. The way that price action tends to go is that it tends to move like this, right? Just think of these as candles or bars, and then we'll kind of get a movement down. Okay, and then we've got the movement up. Okay, and what we're trying to do is we're trying to kind of figure out where the turning points are. Okay, so clearly there's a turning point over here. And there is a turning point over here. And there is a turning point over here. And these are reference candles. Okay, so, and once we get the reference candles, we kind of get the swings, don't we? We get the swings. And if we get the swings, they potentially become tradable, potentially become something that we can use. So the reference candle, let's just take a look at the reference candle. The reference candle we're looking for is as follows. Okay. So we're looking for a candle that's got the highest high, that's condition 1. Condition 2 is that it should move below the reference candle's low. And then condition 3, and condition 3 is everything, is it needs to close below the reference candle. Right? So that is effectively what we are looking for in our reference candles. Okay. So Rose is saying that the swing looks imminent. Well, it does, but let's just see how it evolves, right? The whole idea is we want to not really predict, we want to react. So when I say that, I've got to be very careful. We kind of looking, we're looking for the reference candle. There is an element of prediction, but we don't really want to act on that until we get the reference candle. Once we get the reference candle, then we've got the potential turning point. Now, the difficulty with reference candles, of course, is that they will always be present at swings, but they don't necessarily lead to swings. So we just want to be sort of discerning. It does look, Raj, as if we are going to get it, but gee, it's taking its time, isn't it? So in other words, if we don't get it, then we just carry on moving this way, which is sort of laterally. And if we carry on moving laterally with the real rate, then the possibilities that we move laterally with the US dollar. And Kim brought this up a couple of days ago or a week ago, in that there's no real volatility, there's no momentum. And the idea here is, of course, uh, if there's no momentum, it's very hard for us to trade flat markets. It really is just very difficult to trade flat markets. So, we've got 4 weeks of sideways movements here on the US dollar, 3 weeks of sideways movements on the real rate. Where we do have movement, though, is, of course, on the stock market. Okay, the stock market. So let's just go ahead. This is a different beast. Okay, so we go ahead and let's bring up SPX 500. That's what we're looking at in terms of our analysis, and we're looking at the weekly chart of the SPX 500. And let me just put it on weekly, and you can see this is different. Whereas we've had 4 weeks of sideways movement, say with the US dollar, that's not the case with the stock market, right? Stock market's been moving in that northeasterly direction. So if you've been trading, the volatility should have been pulling you towards the risk markets, the stock markets. The problem that we have with the stock market is this overbought condition. And we're starting to sound like a broken record because we keep bringing it up, right? But the idea here is that at some stage this has to correct. So we've certainly got opportunity to trade, but I think we must be very, very strict with our money management, because at some stage there's going to be a correction here on the S&P 500, just a normalization. You can see the last time we went overbought, okay, we go back here, it's around about July last year. Here's the correction. And then what we do is we look for the dip in the uptrend, and we had a terrific movement up after that. So it just seems that we've gone overbought, and the logical question is, when do we dip? Okay, and after we dip, can we catch the next leg? So that's kind of what we're looking at the moment. There are elements already that are starting to present themselves that should make the market watcher I think when it comes to, we'll take a look at the PCE in a moment, Raj. But the idea here is there are some sort of uncomfortable elements that are starting to manifest in the stock market. So let me show you what I mean by some uncomfortable elements. So you take a look at, say, let's go back to the daily chart here. Okay, and take a look at this. Let's just get rid of all the drawings, remove drawings. And what we're going to do here, just right click on the y-axis and change it to, it's already there, index to 100. Okay, keep it on index to 100. So just right click, index to 100, and just click on year to date. And you can see that the S&P 500 for the year to date is up 7.46%. Okay, it's up 7.46%. So it's had a really good 2 months, 7% up in 2 months. That's terrific, right? Take a look at NASDAQ 100. Okay, and we're up 9.31% in 2 months. That's terrific. I mean, usually we look at about 10% per annum over a longer term basis. So we've kind of accelerated over 2 months and done exceptionally well. Now, where is that growth coming from? So take a look at, say, NVIDIA, right? So we'll bring up NVIDIA and just keep an eye on that y-axis, right? So NVIDIA, you've got a 60% increase in 2 months. That's crazy, right? So that would be contributing to the index. But then take a look, say, at a company like Apple. So let's go AAPL. So Apple, Well, Apple's actually down. It's down around about 6.5% year to date. So that's odd. We've got the S&P moving up, we've got the Nasdaq moving up, but we've got Apple coming down. Okay, so and that's sort of a corner. It's a bell. It's a cornerstone, right? It's something that we should see moving with. It's something that we should see moving in the direction of the S&P 500. Okay, let's take a look. So let's take a look, see what's happening with Meta. Meta would be doing well. Okay, so go through to Meta. Meta's up 36%. So you've got Nvidia up, you've got Meta up, and then you've got a company like Apple down. Okay, so there is some sort of dichotomy. We don't really have that magnificent seven anymore. Let's take a look at, say, Tesla, TSLA, right? What's Tesla done year to date? Okay, Tesla is down quite a bit year to date. It's down about 22% year to date. You see, so you've got this dichotomy really emerging, and sort of a bellwether like Apple, bellwether like Tesla coming down, where you've got the AI stocks all doing particularly well. Okay, so the idea here is, one, we've got a stock market that's very overbought. Number two, you're starting to see that there is a divergence between some stocks. Some stocks are doing well, some stocks are doing poorly. I think ultimately the stocks that have done well, they've done well on a crazy type of basis, 60%, 30%, probably needs to normalize that. And what we're trying to say is that S&P 500 overbought condition, I would suspect, needs to normalize, and then we can start looking at those dips in the uptrend. Okay, Raz has just said core PCE. Let's just bring it up and take a look at if there's anything to see off of core PCE. So we're just typing core PCE there. Okay, here's core PCE. So look, it has. Can you see here? Look at the dots. Look at the dots. Okay, so you can see that the dots have there was a nice sort of acceleration to the downside. It's still moving nicely to the downside here. Raj, let's take off let's make it logarithmic. There we go. I think that core PC is doing fine. You know, if you start annualizing the monthly figures, the 3 monthly figures, the 6 monthly figures, we're getting towards that 2%. So I don't think that the core PC is showing anything that we hadn't expected. I think that we are grinding our way towards 2%, and I think that ultimately the real rate does come down. Okay. The percentages? Yeah, so just go through to, say, like SPX 500. I just want to do gold as well, guys, just before but let's just go through to SPX 500. So, Anna, if I understand you, so if I'm not getting you right, just retype it in. But what you're saying is, how do we get the percentages? Is that right? So what you want to do is you just want to right-click on the y-axis, just right-click, and you'll say index to 100. And effectively, what that means is you're starting at 100% at the first candlestick on the screen, right? So we just want to see the year to date. So just click year to date, and it will tell you where are we from the start of the year, 100%. So we are 106%. So we've gone 6% up, 6.85% up for S&P. Does that make sense? If you want to look at the percentage over the last year, just click 1 year. And on a sort of a yearly basis, so from 1st of March last year to 1st of March this year, we're up 28%, 28.81%. So the key is there's two things that you've got to just focus on. You've got to focus on the y-axis. That's make sure that's indexed to 100, and then of course you've got to concentrate on the x-axis to get your scales right, and just click year to date, which will go from the beginning of the year to the date. Does that make sense? Just let me know. All right, I just want to take a look at gold before we wrap up here. So let's just go ahead, bring up XAU USD. And okay, I want to go back to the weekly. And what we have here on weekly is we do have a breakout on the RSI. You can see 0.1 here. And you can see that we've got this reference candle reversal in here on gold. And we've had a really good week on gold. I mean, not a blowout week, but we've got a blue candle here that's got a higher high and a higher low. So you can see that the RSI are moving up, which we call a secondary signal. Then the price is starting to move up as well. Why do I want to look at gold? Because I think gold may be a precursor to the interest rates coming down. And I think it may be a precursor to the US dollar coming down. So it looks as if gold's starting to move. We just want to keep an eye on that. If gold's starting to move, then I think things start moving into motion. And if things start moving into motion, then we can shift our focus to perhaps the currency markets as the risk markets normalize, because we've got that overbought condition, and you've got that divergence between the stocks, when some doing super well and others actually doing underperforming year to date. So we'll just keep an eye on that. All right, I think that is as far as we'll go today. Are there any questions? Have we covered sort of what you guys wanted to cover this morning? Just let me know. If you found it helpful, as always, click on that boost button. But again, only if you found it helpful. It's also a gauge for me to kind of see if my input is stimulating or not. So, I mean, I want to give a enjoyable live stream. So let me know. All right, nothing coming through. Let's wrap up here, guys. Let's wrap up here. It's Friday, so I wish you all a very good weekend, and then we'll reconvene again on Monday. So thank you very much, and just have a terrific weekend. Thanks very much, guys.